On behalf of President Kaberuka, the African Development Bank is absolutely delighted to be here. Thank you very much, Edith, Arthur. We're delighted to be part of this event with EMRC. I'd also like to say thank you very much to the hosts, ABN AMRO, and also to the home team here. Our partners, very important partners from FMO, NANO, and the African Development Bank is trying very hard to build its relationship with the European DFIs and especially institutions like FMO, which are leading in many ways in terms of innovation and boldness, and we can only congratulate them for the great work that they're doing. In 2009, the bank has approved approximately $2 billion, just under $2 billion of new operations for private sector activities. But that actually understates the bank's inputs into private sector development. As you know, we have a public sector window and a private sector window, sovereign and non-sovereign lending. But in fact, everything that the bank does is somehow directed toward promoting private sector development. I mean, the logic is very clear. If you want to have poverty alleviation, you need to have economic growth, you need jobs. To get that, you need the private sector to become the real engine of that growth. So our public sector colleagues this year have done more than $6 billion of new operations. Most of that has been in economic infrastructure, power, transportation, telecommunications, water. All of that is essential infrastructure for private sector development. Our colleagues in the public sector are also very active on what we call the soft infrastructure, regulatory environments, the enabling environment for private sector. And there, I think they've done in excess of a few $1 billion of new operations. 2009 was a very special year because of the financial crisis, and as a result, we put a lot of emphasis on financial institutions. We have a team that services exclusively financial intermediaries such as sub-regional DFIs. We saw today PTA Bank, West African Development Bank are here. We also work with commercial banks. In 2009, we did for the first time trade finance, and the African Development Bank actually has done $1 billion of trade finance in 2009. This is an emergency response to the crisis. So financial institutions has been a big area for us. When we've been very grateful to have support from important partners such as the IFC, where we've been able to use their trade finance platform to beef it up and do more in Africa. African Development Bank has a few cross-cutting themes that are priorities. Private sector development, one of them, but regional integration is another one of the institutional priorities. The logic is very clear. Africa is made up of 53 fragmented markets. There's no economy of scale unless they get together and create regionally integrated economic groupings. So what is happening in East Africa is the sort of thing that we think is going to help to promote more economic activity, what they call South-South trade. And the African Development Bank has been doing a tremendous amount of its infrastructure to create the infrastructure to promote that regional trade, whether it be roads, railways, ports, etc. So I agree with you entirely. On the private sector side, 20% of our business this year were what we call multinationals, projects going cross-border. So it's definitely a priority for us. I should also add that 2009 has highlighted the limits of the development finance institutions because commercial financing has not been available as a result of the crisis. We've had to work together much more collaboratively, and I'm really delighted that this new platform called the African Financing Partnership, which brings together the major DFIs operating in Africa. So it includes ourselves, the IFC, the EIB, the Proparco, DEG, and FMO, and then DBSA and IDC of South Africa, as well as others such as the Islamic Development Bank that want to partner, to allow us to work together and avoid duplication and wastage, so that one institution does the heavy lifting and the other institutions can come in and provide co-financing. It's a way of being more efficient and more effective because at this time we can't afford to be anything less than very, very efficient.
EMRC is a big network. It's an international association, non-profit international association, which also means an NGO, a big network of entrepreneurs and consultants and financiers and officials, government and institutions from around the world. We cover like more than 100 countries in Africa, of course, in Asia, Europe, and the Americas, with the aim of promoting the private sector of Africa and bringing more partnerships, creating more partnerships, and bringing more investment into the continent.